Folks, today I want to talk about pullbacks. Now, pullbacks is a very interesting question. Like most traders, they love to buy stocks when they're going down. Some traders like to buy stocks when they're going up, momentum trading. The problem with pullbacks, the real problem with pullbacks, how do you know? How do you really know when a stock has bottomed out and is ready to go up? How do you know the pullback's not a reversal and the stock is not turning away and completely destroying all its gains? Well, in this video, we're going to talk about pullbacks and I'm going to show you how to identify the best ones. Folks, I'm actually a big fan of pullbacks. I especially like to use them for trading blue chip stocks. Click the button below this video to sign up for Tuesday's live free class, where I'll show you exactly how to do it to generate abnormally large returns. And I'm unveiling a huge surprise session as well. Folks, there's generally two types of trades. There's three types, but I ignore the third. Let me go through it with you. There's the momentum trades. You buy a stock as it's going up. Then there's the pullback trade. You wait for the stock to go up, pull back a little bit, and then you enter right here, low risk pullback zone. It's a low risk entry in the same direction as the trend. So obviously, if you buy momentum trades, your risk will be higher, but so will your profit per trade. If you trade pullbacks, your profits will be a little smaller because volatility is lower than when you're trading momentum, but you have higher opportunity to have gains. In other words, your percentage of profitability will be bigger. So here you have bigger gains, here you have bigger percentage of gains, okay? The choice is yours. Now, there's a third kind of trade. It's called a reversal. You try to pick the top and you try to ride it back down. Now, I can't trade reversals. You know why? Because there is no indicator out there that'll help me figure out when it's a pullback versus a reversal. It doesn't exist. The only thing we can do is we could look at clues, important clues that can guide us. So, what's the first clue that I look at to determine whether it's a pullback or a reversal? The first clue is volume. Typically, when markets are peaking out right here and they're reversing, volume becomes really high, like extremely high, and it's called a blowout, okay? So a lot of times you'll see a gap around here, reverse at the top, heading towards the downside. That's very common, all right? So volume is typically bigger or stronger when you have a reversal than when you have a pullback. Typically when you have a pullback, volume goes lower. You'll see volume kind of go like this and then pick up again. So volume is the first. Number two, volatility. All right? Typically, and this is a very important clue and not a lot of retail traders know about this. When markets are breaking out, volatility is high, very high. When you're trading reversals, volatility is usually very high. But when you're trading pullbacks, volatility declines as the short-term trend goes against the main trend. So volatility, if you see a trading range, let's say average trading range between the high and the low of $2, the trading range around here may come down to $1. And then when it comes back up here, pick up and go to $2 again. Whereas when we're having a pullback, the volatility here would be at $2 and would continue even getting higher as the market starts heading down. So it would be maybe $3 here, all right? So the point is, volatility is very important when you're trading pullbacks. So one way to determine if it's a pullback versus a reversal is to see if volatility is getting lower and if volume is getting lower. And if you see volume and volatility getting lower, that's a very strong sign that we're holding a pullback instead of a full-on reversal. When you see volume and volatility pick up when the market or the stock or the ETF is going against the trend or erasing the trend, that's usually a sign that there's more downside to come. And when you're seeing a decline in volume and volatility, that's telling you that participants in that stock are losing interest in that stock. And when they're losing interest, that means they're not interested in seeing more downside. They're waiting for an opportunity to become a buyer and buy at the pivot that separates or connects the long-term trend with the short-term trend. Sorry, this is a little messy, but you have the long-term trend, you have the short-term trend, and you want to buy when the long-term trend and the short-term trend connect. And that happens right here. That's the nexus between the short-term trend and reversion of the long-term trend. The long-term trend is the trend you could see on your monitor from the other side of the room, and the short-term trend is the little wiggle line that erases part of that gains and stops, lets you get in to continue the ride back up. And the reason a pullback is a great trade, because if you enter right here, you'll know right over here if you need to be stopped out or not. So there's a very little distance, and it's called buying at a very low risk entry opportunity. And that's what I like about pullbacks. So keep your eye on volume and volatility when trading pullbacks, and you'll be able to differentiate between pullbacks and reversals. Don't forget, I'm teaching a live free class Tuesday about powerful pullback trades. I'll tell you exactly how to find out exactly which trades to enter and when you need to start buying. Plus, you'll learn about high velocity pullbacks. When these rare opportunities strike, you can reap life-changing profits. And I'll show you how to spot them before they happen. Class starts shortly. Grab your last chance to sign up now. Use the button at the bottom of this page. I'll see you there.